Welcome to TEDoptimus channel. Our channel will share financial information and knowledge on Malaysia stock markets. In this episode, we will cover digital banking and some interested listed companies going after the license. The evolution of any industry that comes from the innovations and disruptions that redefine it is always an interesting phenomenon to watch. The smartphone evolution in the late 2000s dethroned Nokia from the best-selling mobile phone brand to almost nothing when it was too late to enter the smartphone market. Then there was Kodak, which commanded a market share of 85% for cameras and 90% for camera films in its heyday but had to file for bankruptcy in 2012 due to its worsening financial performance since the late 1990s. These examples have never failed to serve the humble reminder that, no organization, no matter how deeply embedded its roots, are safe from the threats of technological advancements if they remain complacent doing the status quo. And among the various disruptions that are taking place globally, one that is being closely watched, especially in Malaysia, is the future of banking. The past decade has seen many disruptions from payment systems to blockchain, fintech, crowdfunding and peer-to-peer lending, all of which seem to be giving conventional banks a run for their money. In the region, the Hong Kong Monetary Authority has issued 8 virtual banking licenses last year while the Monetary Authority of Singapore has issued 4. Bank Negara is well aware of the accelerating pace of which financial services are moving into the virtual space and the initiatives it has to undertake in supporting the nation's transition to a digital economy. This led the central bank to launch the policy document on licensing framework for digital banks on December 31st. The size of the banking industry in Malaysia currently is approximately around RM3 trillion to RM5 trillion in terms of total assets. While no one can accurately predict the size and future value of a full-fledged digital bank, but with non-bank companies such as telco group Axiata Group Berhad, conglomerate Sunway Berhad, tech firm Green Packet Berhad and AirAsia Group Berhad through its card-based money app BigPay openly stating their interest, it seems quite obvious that the value proposition of digital banks is immense. So when the concept of digital banking started to surface in recent years, many people wanted in. The furor also attracted lesser-known companies that are hoping to jump on the bandwagon to get a slice of the pie. It was like the start of the data analytics and data science boom several years ago. Nobody understood what it was, but everybody wanted a piece of it. Applications for the license closes on June 30th and Bank Negara is looking at issuing up to 5 licenses by the first quarter of 2022. It is learnt that more than 40 parties have registered their interest to apply for the license. CIMB Group Holdings Berhad, which has been making great strides on the digital front through its wholly owned subsidiary Touch 'n Go Sendirian Berhad, and its digital bank in the Philippines and Vietnam, said they were approaching this new competition on multiple fronts. Touch 'n Go Sendirian Berhad owns 51% in TNG Digital Sendirian Berhad, the joint venture company with China's Ant Group that runs the Touch 'n Go e-wallet, the leading e-wallet in Malaysia with more than 15 million registered users. Effendi Shahul Hamid, the chief executive officer of CIMB Digital Assets and the group CEO of Touch 'n Go said they are innovating internally to ensure they acquire capabilities as quickly as possible in order to continue to compete. New entrants will bring new capabilities to the market which we all hope will then create higher standards and fuel a more vibrant financial services marketplace. Ecosystem and platform players have really made a huge impact in other areas of day-to-day life. I am of the view they will make an impact on banking, he says. Effendi adds that incumbents have generally taken 2 distinct views on digital banks: evolve internally to compete, or partner to build a separate business outside the core. The former could take the form of accelerated digitalization or building a bank within a bank. But to do this, one must believe they have the right people, culture and capability for this to succeed in separate management track where speed and execution are concerned. For banks who opt to partner to build separate businesses outside, to be successful, the right DNA for partnerships must prevail, insecurities must be lifted on cannibalization and the intent to build a highly valuable business outside the core with separate governance should be embraced. PwC Malaysia Financial Services Technology Consulting Lead Ravi Kidan says the key advantages of partnerships would be the ability to develop products, capabilities and services which are otherwise difficult to achieve within their own environment due to legacy and culture issues. They would be able to access new clients and data which is hard to replicate within their current environment, and they can look forward to learning and absorbing new ways of working and use of technologies into their current setup. Some of the pitfalls of this strategy are, of course, the increased complexity of running two licensed banks. The capital, technology and talent requirements for the setting up of a digital bank can be onerous, and the shift of focus towards digital banks may lead to reduced investment in conventional banks, says Ravi. In the next episode, we will discuss Green Packet, Sunway, and Axiata, and their position as interested parties for the digital banking license. Kindly like and subscribe to us, as the problem is not the number, it is the value we can deliver to you through our contents. Thank you. Text credits to Roy Stan.